Welcome back, ladies and gentlemen, to another market review, my least watched but most valuable video, and it is what it is. But let's just dive right into the video without further ado, because today I got about 18 slides. I got a bunch of things to show you guys on macro trends, and there's a lot to talk about today. We got to talk about Coinbase, we got to talk about the news, we got to talk about everything that's going on. In the conclusion, we're going to talk about what I'm actually doing about it. Actually, I'll tell you what I'm doing about it right now. Not gonna make you wait. I'm basically still buying USDC. So for everybody that tunes in all the time, you guys already know that. And this is what we're gonna talk about today. This is the agenda. We're gonna talk about news. We're gonna talk about stocks hitting lows, stocks hitting highs, cheap companies to watch, and we're gonna talk about reporting earnings. Actually, let's go to cheap companies to watch first, just because I'm gonna show you guys what I'm actually looking at. So for you guys that aren't new to the channel, you guys know that I love this tool, the Magic Formula Investing Tool. It's from a guy, Joel Greenblatt over here. He made the Common Sense Investor's Guide to Investing. One that you'll find on here. These are basically screened by companies that are making a high return on capital, and they essentially are selling for cheap, right? Based on their PE. So they're ranked by PE and what type of return they're getting on their capital. Interesting thing in here. So I've been buying some Altria, but there's a lot of whales that are selling Cigna Corp. Yeah, we had Bartman Investment Managers. They are actually selling Cigna Corp. So they trimmed down their investment position by 11.74%. So Barton Investment, they actually are selling Cigna Corp. So, you know, maybe there's something going on there. So just because a company is cheap doesn't mean that it is a good investment. These whales are selling it, which doesn't necessarily mean that it's a bad investment, but I always like to start here, start my search in this area to see if there's anything cheap that I actually enjoy buying. One thing that's interesting that's been on here recently is Turtle Beach. So that'll be something that's good to look into. Last time I looked into them, they had a bunch of debt, but just Gilead Sciences, this is one that a lot of people are interested in buying. But anyways, Altria, it's consistently been on there. Intel was on here back when it was cheap, and then as we've seen, it shot up to the moon. Weight Watchers was on here. It's still on here, and that had a big rebound. So I like to start here. It's a good place to come here, see if you can find any companies. You can change around the parameters. So if we make the companies bigger. All right, now we got AbbVie. Okay, I've been buying into AbbVie. We got Campbell's Soup in here. Okay, Campbell's Soup in the house. Dollar General. So anyways, back to the news. We've got some civil unrest going on. We've got Minneapolis. They're still, protesting out there. Whatever your opinion is about that, we are not going to talk about that today. But people that aren't new to the channel, you probably know what my opinion is about that. We got mass shootings going on. So basically just more civil unrest. And Amazon is hiring a lot of people, actually. So if you want a job that's $16, $17 an hour, look at Amazon. They're sending out emails, mass blast. So if you're looking for a job, look at Amazon. But the thing that I wanted to talk about is the story that they are actually competing with companies like Wayfair, Bed Bath & Beyond, Home Depot, Lowe's, by actually assembling furniture, delivering it and assembling it. So that's something interesting. The Amazon, they have their continuous takeover. In my opinion, that is a great buy and hold company. You can't go wrong with that. Obviously, we don't want to buy at any price, but I almost would say that you could buy Amazon at any price just because it's that good of a company. Okay, so these are some things that we want to look at here really quick. So we've seen an uptick in housing starts after the pandemic peaked. However, it has been pulling back a little bit just because raw materials are costing so much, but we're still seeing that general trend line up. And these building permits can be basically an indicator of the direction of the housing market, right? If there's more and more demand for houses, that means that housing prices are likely going to continue up. If we zoom out back here and we go back to 2008, we saw the dot-com bubble happen, and then they injected a bunch of cheap money over here, and that was right before the housing crash, in which case we saw the housing starts, building permits go down, okay? So that's something to keep your eyes on. Non-defense capital goods excluding aircraft. So this basically is a little bit of an indicator of business activity, okay? So what are businesses actually buying? What are manufacturers buying? So we see that this is generally in an uptrend, okay? It ticked down a little bit in February, but we have some more spending going on in March. I would assume that it's going to be ticking back up. All right, average weekly hours of production. So this is a good indicator of, it's a different way to look at unemployment. It basically is asking how many hours are people working weekly. So we saw that it obviously hit a trough over there in April, and then it started to tick back up. It's still ticking back up. And so people are basically going back to work. That's what that's telling us, because you can't just go by how many people are actually working. You have to go by how many hours are actually being worked, and how many hours are actually being required to produce what we're producing in terms of GDP. Moving over here into initial jobless claims. If we move over here into the 2008 recession, we see that it peaked out around 652, 653, there's 660. If we go over here, we saw 6 million over here, about 6 million. And then we're ticking down, and we're still higher over here. In January, we're still much higher than it was at the peak of 2008 in the crisis. So last week, it was at 769,000, which is higher than it ever was in 2008. This week, we ticked down a little bit to 576. So that's still higher than it was in most of the global financial crisis in 2008. So it's kind of hard to say that we're in a booming economy, because there's a lot of people that still aren't working. They still can't find work. And the last thing to keep your eye on is the growing money stock. So they discontinued the other form of money supply, and they just have gone to this new way of measuring the money supply. So we're still seeing billions and billions being added to the money supply. We're still seeing the Fed going in and buying treasuries to keep the yields down. So cluing in here on the consumer sentiment, we see that the consumer sentiment in February was 76.8, but we are starting to see an uptick in consumer sentiment to a consensus of 89.6, right? So it was 84.9. So we're seeing a little bit of more confidence from the consumer. We're also seeing that the future conditions are improving. Basically, the consumer thinks that things are getting better. Okay, so we're starting to open up. We're starting to roll out vaccinations. And the inflation expectation is one that is something to definitely keep your eye on, because the 1-year inflation expectation has ticked up to 3.7%. So the thing is, the Fed typically does not get the inflation expectation correct. They just kind of put a guess out there, and we will have to see what happens with that, all right, as they continue to print money and roll out new spending bills. So this past Friday was options expiration date. We saw that the Dow was up 0.38%, S&P was up 0.2%, NASDAQ was down, Russell 2000 was down. So we're seeing growth starting to underperform value a little bit. And as we talked about earlier, housing starts are starting to tick up. They hit their highest level since June 2006, which was right before the housing bubble and crash. In the macro environment, financials reported strong earnings this week, and they were only up 0.77% on the earnings. So this could be that financials are already priced in to have good earnings. So that's something that people need to really keep their eye on, is that sometimes even if you report very good earnings, it could have already been priced in. People were already expecting good earnings. So when it happens, you basically either buy the rumor, sell the fact, or you just buy the rumor and the price is already run up. So it's already priced in. So the Fed basically thinks that we're going to have about 2.01% inflation. But like we said earlier, we never know with the Fed. We never know whether they have either an agenda or they just are incompetent. You never know. But they're typically not right. They're wrong by, plus or minus. So, and they also, you kind of have to question their methods. So 3.7% is what the Michigan Confidence is expecting, and the 5 to 10 year expectations tick slightly lower to 2.7%. Also in the macro environment, China reported 18.3% GDP growth, assuming that they're reporting accurate numbers. They're definitely on their way to overtaking the U.S. economy as the strongest economy in the world. So we got to keep our eye on that and see what's going on with that. I personally don't invest in Chinese companies, Chinese stocks, just because I don't trust their numbers. I don't trust what comes out of there. A good book to get some perspective on what happens in China is called Stealth War. It's by an old brigadier general and General Spaulding. And he basically breaks down what's going on with the Chinese government and how all of their companies have a CCP board member. So they're trying to regulate that away as far as U.S. listing of the Chinese companies, but you just never know. So stay careful with that. J&J vaccine was paused. So this was in the news. Basically, there were blood clots with 6 individuals. What's my opinion on it? Personally, I don't think it's going to be that big of a regulatory hurdle. J&J is actually reporting, they're having their annual meeting, I believe, on Wednesday, and they're reporting earnings. So it should be interesting to see what they have to say about that. And they actually tried to reach out to AstraZeneca, Pfizer, and Moderna, and Pfizer and Moderna declined to work with them because Pfizer and Moderna are still able to administer their vaccine. So this should be interesting to see what goes on with that. So materials and gold. So we got some interesting activity going on in the materials and gold sector, because Alcoa just reported Q1 results, and they had very good results, and that's because the prices of materials are going up. So let's go look at some Alcoa really quick. So check it out. Alcoa is up 13.05% in the past week. They're up 15% in the past month. So they're basically on a tear. Yeah, so basically they're an aluminum manufacturer. It says Q1 sales hit profits highest in 2 years. But I want to show you guys, if we go over to macro trends here, a little bit of Alcoa, like just their net income over time. So if you check out Alcoa's net income, check this out. 2020 was a decline of 84% from 2019. 2019 was a 550% decline from 2018. And 2018 was a 10.39% decline from 2017. So this is a declining business. And not only are they a declining business, they're taking losses, okay? So this is not a great business. Just because the stock price is going up doesn't mean that they're literally not earning any money. PPG has a very similar story going on here. They're part of the materials sector, glass products, it operates in performance coatings, blah, blah, blah. They're up 11.44%, but I just want to show you guys what type of business this actually is. So if we look at their net income, look, we see that is a 14% decline in 2020. We see a 7.31% decline in 2019, and we see a 15.87 decline in 2018. So these businesses are retracting, they're not growing. It looks like they peaked out over here in 2013, 2014. Okay, so these businesses are not, like, they're going up in value, and they possibly will benefit from infrastructure, but there are plenty of good companies out there that you can buy instead. So I wouldn't look at these basically. One thing that is interesting is gold miners. Okay, so if the price of gold starts to go back up, look, we see that gold has been trading sideways, and essentially when gold has been trading sideways, we've seen gold miners take a massive beating. Okay, but recently, if we go to the month chart, okay, we're up. If we look at the week chart, gold miners are going up pretty well. So Barrick Gold, that's one that Warren Buffett had bought at one point, and it was doing pretty well for him. Here's another decent gold miner. If we go over to the 1 week chart, Anglo Gold Ashanti, they're up 2.16%. We go to the month, and they're up 2.42%. So Anglo Gold, this is a company that is out of South Africa, Johannesburg, and they're generally a pretty profitable company. So it's something that's interesting to look at, little gold miners. So that could be a play that if you want to get into gold miners, you could check those out. These ones down here, also pretty decent buys, I would imagine. These are just other gold miners. It's basically showing that gold miners are in the green. So if the price of gold starts to go up, we will definitely see that the price of these gold miners will go up even more. And as we see down here, we got a 2.04% dividend yield over here. And coming back over here to Barrick Gold, we see that they've got a 1.45% dividend yield. So they do actually pay a dividend with Barrick Gold and Anglo Gold. So if you are interested in gold, you might want to check out those miners. All right, Coinbase. This is an interesting chart here. All right, I stole this off of Instagram. And check this out. So it opened at 380. It started trading at 344, or it's trading at 344 currently as of Sunday, April 18th. So in quarter one, it made 1.8 billion in revenue and 765 million in profits. So look at this though. This is the issue. Okay, you go back to 2020, 2019, 2018, 2017, and what you see is some pretty decent revenue, but as Bitcoin goes up and as people get more into buying Bitcoin, they make a lot more money. But as people aren't as interested in buying Bitcoin, they make significantly less money. So one thing that I would say about this stock was, which is one thing that Jeremy also said over at Financial Education, is that this stock is mispriced, right? Because based on its current valuation of a $68 billion market cap, it has a PE of 22.26. So assuming that it does this over here, so after 2017, revenues declined by 43.9% and profits declined by 85%. So if the stock is based on the profits and the profits declined by 85%, the stock would go to 49.79. Whereas let's say if this continues, okay, so it would be priced at a PE of 22.26. Most companies that are growing the way that Coinbase are growing are priced at more of like a 70, 80, 100 PE. Okay, so companies like Amazon, for example. So this stock would either 5x or it's going to go down by 85%. So basically what these numbers say is that Coinbase is either way undervalued or it's way overvalued. It's either going to 5x or it's going to go down by 85%. So it'll be interesting to see which one it is. I don't necessarily have the capital or priorities to put too much money into Coinbase. Unless the price goes down significantly, I'm not really interested. So we did have a little pullback in Bitcoin this morning though, and I did jump in on that. So driving the economy, increasing COVID vaccinations. We've got 40% have received at least one dose. Warmer conditions are leading people to travel, and we have a very dovish monetary policy. So the last three things that I want to do for you guys is show you guys some 52-week highs, 52-week lows, and also show you guys what companies are reporting earnings this coming week. So kind of like I told you guys yesterday, there's a lot of really garbage companies that are showing 52-week lows. So Nikola is showing 52-week lows. If we go up to the H section, we can see Hyliion is at a 52-week low. A lot of these other ones are just really small companies. Pharmaceutical companies are hitting 52-week lows. Bio, we see basically a lot of biopharmaceutical companies are hitting 52-week lows. And then the last thing that we see is companies that are shorting, essentially. So anything that's shorting right now is hitting all-time lows because the market is just going up and up and up. So we see people that are shorting, garbage companies, and a lot of biopharmaceuticals. So small companies, they're getting kind of waxed right now. Companies that don't make any money, don't have any earnings, are getting absolutely hammered. Moving over to the 52-week highs. If we look at 52-week highs, we see about 1,474 companies that are hitting 52-week highs. Right up the top there is Alcoa. That was the one that we were talking about earlier. So even if you're just doing technical analysis, when we're at 52-week highs, you want to buy at a discount. So that's a little red flag. Maybe you put your capital elsewhere. There's plenty of other things to do with your money. You could even invest in fine wines. Who knows? Whatever you want to do out there, you just want to make sure that when you're buying something, you have an actual advantage and the thing's actually cheap. Last thing before we go into earnings is month to date. IT, information technology, is outperforming all other sectors. We see communications is in second place there at 5.2% on the month. Consumer discretionary is at 6.6%. So we see those companies are doing very well. Real estate is actually doing pretty well. I've been buying into some Realty Income. I'll probably buy some more when I get my next check. It's either between Realty Income or I'm going to buy some more USDC. So companies that are reporting earnings. I just put this to large cap just because I assume that you guys don't want to see all these other small caps. So we've got Coca-Cola and IBM reporting on Monday. Those are some pretty interesting companies there. United Airlines Holdings, that ought to be a little bit interesting as well. Johnson & Johnson reporting on Tuesday. That should be one to watch. I actually hold some Procter & Gamble, Bank of America, Adobe, and I hold some Netflix. So that'll be interesting. L'Oreal, I didn't even know they were public, but a lot of these other ones should be pretty interesting to watch there. KeyCorp, that'll be a good one to watch as far as how the banking sector is doing in general. We have seen a recent outperformance in the telecommunications sector, so it'll be interesting to see what Verizon reports, and I do believe they will report right before AT&T reports over here on Thursday. We've got Johnson & Johnson and Pfizer having their annual meetings on Thursday. We also have Intel reporting. AT&T will be reporting, which is very close to after Verizon reported. So if you want to make some moves on AT&T, it might be wise to try to make them before Verizon reports, because that is a little bit of an indicator of how AT&T is doing. Lockheed Martin is going to have their annual meeting. And anyways, hopefully you guys liked this video. If you did, give it a thumbs up. Let me know that you like these types of videos of looking at what the market is doing. So like I said before, I'm probably looking at USDC. I'm looking at some possibly Realty Income. I just want to get my income up on this income sheet over here. All right, I'm trying to get this up to $200 in cash flow for monthly dividends, but hopefully you guys liked the video. I'll see you guys in the next video.